Hi, this is Joseph. In this video, I'm going to talk about a particular trade technique that I use, and I get questions about it every once in a while because it's not one of the techniques that I normally make videos about. So generally, I make videos about the continuation breakout trade. These are all strategies that I developed: the continuation breakout trade, the Tech 1 trade, T2, T3 pattern, and HL30s. These are all uh, techniques that I developed. Now, obviously, I didn't, create the indicators and things like that that I use, and some of them are actually similar patterns. For example, the continuation breakout trade is something that I developed as a result of me trying to apply John Bollinger's breakout strategy with his Bollinger Bands. And the way that he uses it and some of the tools that I was using, some of the indicators, it wasn't making any sense to me, the way I look at things. We all look at things differently. You can show, one chart to two different traders, and sometimes you'll get totally different opinions. So it's sort of like that. So I started looking at charts in a more, to me, the way I look at it, in a more simple way that made sense to me. So I started boxing in ranges of consolidation, for example, rather than just look at the Bollinger Bands themselves. I mean, I can see how they sort of come together and you get that squeeze play, thing going on, but it made more sense to me when I was able to box in ranges of consolidation like this. And that's what I'm getting at. So that's why I take some of these strategies or some of these ideas and concepts, and then I molded them into my own system, my own way of interpreting that data, that information, and then tested it. Of course, right? I had to have a specific entry because I wasn't getting in at the same locations that a lot of these other people that were using these certain strategies. So that's how I developed the continuation breakout trade. It was a matter of me identifying consolidation and then waiting for breakouts. But today was a little bit different. This is the dollar yen, and this is the 1 hour time frame. And all of these indicators are the ones that I use to trade the continuation breakout trade. But today was not really a continuation breakout trade. One of the first things, for those of you who are using my signals, and you asked me today, I got a couple of emails and asking me what was that strategy that I used today on the dollar yen. So I want to review that. And it was a reversal pattern, but there was also a continuation signal candle. So that's why the confusion, and that's why I received the emails. People were saying, well, was it a continuation breakout trade? They just want to know, right? They just want to know. They're comfortable with me trading their accounts using my signal service, my trade copier service, but they wanted to know what it was. So this was a reversal, and I did not go long. And they wanted to know, another question was, why didn't I go long, right? Why didn't I trade this continuation breakout trade right there, right where I have my cursor? The first thing that I always say, and I say this to myself, but I realized this when I started trading this technique, is that eventually, if I trade a continuation breakout trade, eventually I'm going to take one at the end of a move. It's possible, right? A trend. If you look back over here to the left, this is this dotted line right here. That's the start of the new week. So we can go all the way back to last week. We had a continuation breakout trade last week. We had another one that developed here, but it wasn't lining up with my signals, giving me an opportunity to go long. So it pulled back, retested that support level, pretty close, and then broke out again. And what I'm getting at is that eventually, with multiple continuation breakout trades in a trend, eventually, just by nature, I mean, knowing what a trend does, eventually it stops, right? You need to find out where and when it's going to stop. And that's what we're going to review right now. So one of the things that I like to do when I'm trading the yen, whether it's the dollar yen or the yen crosses like the euro yen or the pound yen, I like to keep an eye on the Japanese yen futures. I like watching futures. I get to see volume, real volume, not tick volume like you would see normally on a MetaTrader platform. I want to see volume. I do the same thing with the dollar. So if we were to take a look at this, first of all, again, we have to remember that eventually a trend is going to stop. That was the first thing that I thought of when I saw this continuation breakout signal candle. And it normally would have given me that 3-pip entry, right? I have a specific entry with this one. But again, when I stopped and I looked at it, I realized, well, there's been multiple continuation breakout trades. And based on some of these first initial continuation breakout trades, price has already hit its extended, its take profit target. according to the distance that I calculated when I developed this technique, as far as how far would it go after the breakout. So that's the first thing I need to keep in mind. It's already hit its target. If it would not have hit its target based on the first initial breakout in the new direction, in this new trend, then maybe I would have considered getting into it. But again, going back to the idea of looking for more information in the market, looking for more clarity, looking for more opportunity. So I'm investigating, right? When I see a trade like this, first of all, I want to know if there's any economic data that's moving price around like this. The next thing is, obviously keeping up with economic data, I pretty much get a good sense. You get a good sense when you do this. You start tracking the reports and economic data over a few weeks, and you can see basically where everybody else is anticipating the market to move. But you can also see it technically. Sometimes you can't, right? That's why we call it consolidation. Sometimes consolidation is really choppy and confusing. Nobody really knows where it's going to go until it breaks. But again, with this move here, it was pretty easy when I started to apply Japanese yen futures and volume and looking for a possible reversal this morning. And I'll show you what I'm talking about. But before I do that, I want to show you the dollar. So if you were to use the dollar index, you could also see that it was bouncing and that it sort of printed that reversal, but it didn't go too far. And this one here, this is the 1 hour time frame for the dollar index. This is MetaTrader, by the way. We're looking at a support low there, but if you look back over here to the left, you don't really see, you see a few support levels, but I want to show you what made much more sense to me and what also made it a lot more obvious, in the sense that I was able to also take a look at volume levels. So as volume levels start to diminish and I see this bounce, this blue line right here, this is Japanese yen futures. This is not a currency cross pair. These are Japanese yen futures. So I'm going to open this up a little bit so you can take a look at the volume levels, and you can see how this was sort of warning and indicating that we were probably going to see a reversal. You can, if you study volume and trading volume, you can, that's a subject for another video. But I want to show you why, in my opinion, I was also able to determine this possible reversal again. So something else I want to show you, this might look a little bit confusing. When Japanese yen futures, when price is moving down, this is going to show me weakness. And when price is moving up, this is going to show me obviously strength, but it's the opposite of what you see in the dollar yen. Right? Because the dollar yen, when price is moving up in the dollar yen, that's dollar strength. When price is moving down on the dollar yen, that's yen strength. So we would need to see price moving up to determine yen strength, which means the dollar yen would drop. All right? So at this location here, when it printed this reversal, and I could see that there was a heads up and a warning with this volume and the way the price pushed, but this blue line right here is a support level. And I want to show you that support level. Sometimes support levels can provide, in the future, a key support level. You can see how on this 1 hour chart for Japanese yen futures, price, this was a real obvious price swing. I mean, there's no mistaking that this is a clean price swing. These are some of the clues that I look for. If I was going to trade this in an up direction, I would probably consider labeling this with what we could see right here on the charts, A, B, C. You see what I'm saying? So this is a pretty key support level, and you'll notice how price stopped right there at that support level. It doesn't always happen, but it happens often enough. We all trade off of support levels and resistance levels similar to this type of behavior. So that's not where it stops, but this is just what was leading into sort of piecing together the components that allowed me or gave me the confirmation for this possible reversal. Now, today's reversal was not a reversal in the trend. It was just a bounce. It was just an opportunity to trade this for a few pips. I got to be paying attention to take profit levels. I'll talk about that in just a moment. So let's go back to the chart here. So this is the Japanese yen futures. That's that bounce. This is the reversal right up there at the same time. Now, sometimes using this particular technique, I don't need to wait until I get, and this is a Tech 1 trade. That engulfing candle right there, that bearish engulfing candle, that is a Tech 1 candle. Sometimes I can get in a little bit sooner. Sometimes I can switch to a 30-minute chart. This is a 30-minute chart. But as this is developing, what I'm also looking at is a particular strategy, and it's a formation here in the CCI. So you notice I have the CCI in almost all of my charts, and I'm a big fan of using the CCI. And I started off using the CCI and I really liked it. So all of us have indicators that we like, right? For whatever reason, some of us just like them, other people don't like them. And that's okay, right? There's just so many different ways to trade. You can't say that the way somebody's doing it is wrong. I mean, if it works. So the CCI is again, another tool that I've been using. I apply it to I use it exclusively for the HL30 reversal. But in this instance, I'm looking for a pattern that we call it a ghost pattern, but it's also a head and shoulders pattern in the CCI. And it's a strategy that I actually picked up and learned about from a group of guys, a group of people that were trading online back in the first couple of years of my trading career. And they were basically an exclusive CCI club. But one of the things that I found that they did, I couldn't stay in their club, their group for very long because I didn't like the way they traded it. But what they were doing was, this is how they traded. The more hardcore CCI traders in this group, they didn't look at price. They didn't look at the candles. They didn't look at support and resistance. They didn't look at price. They didn't care. All they did, I'm talking about the hardcore CCI guys in this group. All they did was looked at patterns in the CCI and traded what they saw, and their charts looked just like this. They didn't look at any other indicators, and they didn't look at price or candlesticks or anything. And I was in there to learn what they were doing and to see if I couldn't apply some of it to what I was doing, right, to my trading strategy, and see if things didn't make sense, because I'm a big fan of the CCI. I wanted to learn more. But there was a few patterns that made sense to me, but they still had a high percentage of losses. And I'm really all about, me personally, and the way I built my trading strategy, my system, is that I'm all about trying to be right 100% of the time. Now, I say that a lot, and every once in a while somebody will say, before I even get a chance to finish the whole idea behind that is, they'll raise their eyebrow and go, yeah, okay, well, you sound like an idiot. But you can't be right 100% of the time as a trader, right? I don't mean it like that. What I'm saying is, my goal personally as a trader is to be right 100% of the time. And that means that I have to follow a disciplined plan, a disciplined lifestyle. I've got to control my environment, not take phone calls, not answer emails, right? In the heat of the moment, when you're trying to calculate all this and you're trading for yourself and you're trading for other people, you've got to put food on the table, and you've got a family that's waiting for you, or you're trying to grow an investment account or a retirement fund, whatever it is that you're trying to do, you need to pay attention. You need to be 100% focused. The only thing that I can do is control my behavior. So that's why I say I try to be right 100% of the time. I know I'm going to have some losses, but I do everything I can to make sure that I take the right trade. I don't want to just guess. Some people guess, right? They see price moving up and they see price moving down, and they guess and they say, okay, well, I can see where it's probably going to go, so I'm just going to take it. And they get in, and there really isn't a specified entry, and then they just wait a few pips, and then maybe it'll go up to a certain level, maybe it doesn't, and then they hesitate because they don't really have a take profit target on it anyway, so they just close out with whatever they get. That isn't the way to trade. That isn't the way to trade consistently. Maybe for a scalper, maybe somebody's got a strategy that works around that kind of concept, but never worked for me. The way for me to trade, for me, for myself, for my family, for others, for my subscribers, for my investors, I've got to control my behavior, and I need to know why price is moving. And if what I see, the price action and the movement, doesn't make any sense to me, then I'm going to stay out of the market. Now, I know it sounds like I'm really disciplined about it, and my voice, you hear me say it like that stern. I live that way. It took me many, many years to achieve that right there, that capability. That was not easy for me to do. When I was losing money every single day in the beginning of my trading career, I was scared. I can't even tell you. You know exactly what it feels like. And all I wanted to do, and all I could think about, was I need to find another trade, and I need to find it fast. And if price is moving, I want to get some of it. That's all that went through my mind in the beginning of my trading career. And as a result of thinking that way and not having a discipline and trading out of fear, I lost even more money. And I lost a lot of money before I stopped. So over time, I evolved as a trader, and I became more disciplined. Obviously, just more pain, more loss, right? That by itself will sometimes fix it if you can stay in the game, if you've got enough capital to stay in the game. A lot of people don't have that opportunity. A lot of people start off with $5,000, $10,000, $15,000. They'll blow up their accounts, and they're gone. They can't come back. That's not what I did. So you have to have that kind of discipline. So one of the other advantages that I have to be able to close every single month with a winning or with profits and not have a losing month is that I know when to stop trading. If what I see doesn't make any sense, then I stop. Well, this behavior, this CCI, just trading off of the CCI didn't make any sense to me, but I blended it with some of the strategies and some of the tools that I was using anyway. So what I do is I'm going to make the adjustment here because this is the way I look at the charts. This is how I do things. I will look for the ghost pattern in the CCI, but just because I see it doesn't mean I'm going to trade it right away. I see the ghost pattern very often, but it needs to line up with other things. If I'm looking for the ghost pattern here in the CCI, then I need to know if this is a real key resistance point where price could potentially turn around. Well, sometimes here in the indicator, here in the for example, the dollar index, most people just look at the dollar index and try to line that up and use that to trade either the euro dollar or the dollar yen, whatever. I really couldn't see a support level there on the dollar index, not on the 1 hour time frame, but it made a lot of sense when I looked at the Japanese yen futures. I was looking at futures contracts, futures traded. We were looking at real volume. I was able to find a key support level on the futures contracts, on the futures chart, and I was able to see that blow off move to the downside where price was probably going to turn around at that support level with volume levels, and that all set up at the same time I saw that head and shoulders pattern, that CCI ghost pattern here. So that's how I trade the CCI. If I'm going to trade a pattern like that, I am not going to look at the charts the way I showed you just a moment ago where you're just looking at the CCI. That to me, I'm not comfortable with doing that. I'm not going to say that the way that they did it was wrong, but when I traded with those CCI traders, they still had a really high percentage of losing trades, and that's not what I was interested in. I was interested in eliminating the possibility of getting into failed trades. So if I was to just look at the CCI and or leave my charts like this, but look for the the head and shoulders pattern, and then just trade it blindly every single time I saw it just because that's what I was told to do or taught, I'm still going to have a high percentage of losing trades. And I don't want to do that. I don't want to lose if I don't have to lose. I'm going to do whatever I can to protect capital. I'm going to do whatever I can to earn money. And in order to blend those two concepts together, then I'm going to have to be extremely disciplined and very, very disciplined when it comes to investigating and looking for the perfect trading opportunities. I don't always get them, right? Sometimes I have to wait for more time to pass and let a particular currency pair move around so it sets up and it makes sense to the way I see it, and I can use all of these tools that I have that I've learned and as I piece together my trading system. But this will give you an idea of what I was doing and why I didn't go long. Now, I'm not saying that price isn't going to go any higher here on the dollar yen. It certainly could. But at that moment, it gave me a choice opportunity to sell it for a real short-term profit, short-term trade. Again, this is not predicting a major reversal. It's just a short-term reversal. It's just short-term. I'm day trading, so I've got to get my expectations in line. I know that I'm going to get in, get out relatively quick. It hasn't broken any trend lines just yet to the downside, so I've got a long ways to go here. We've got more time. You can see what it's doing with the Bollinger Bands. That's the center line of the Bollinger Bands, still holding right above that middle line. There's a lot of things that need to happen before I would start thinking that this whole thing is going to collapse and turn around and come back down here to support. One of the key things that I look at is the week's high and low. And on this chart, on the dollar yen 1 hour time frame, there's my weekly low. So maybe if it was going to reverse, I would need to see price take out that low, at least at this moment, based on what I see here on the charts. Things might change over here, right? It might move up one more time, then pull back down, and then maybe print a continuation breakout trade to sell it with some news later in the week, and then that'll give me an opportunity to sell it, and I don't have to wait for that weekly low to be taken out. Maybe I could just trade it to that weekly low or something like that. I'm not predicting anything. I'm just sort of giving you some ideas of what I would be looking at. So I reset. When I get in and out of these trades, I reset my my approach. I wait for the next opportunity. I start looking and scanning through the charts. I read through the news again. Notice if anything's changed. Watch volume levels. Wait for the market to close. Take a look at daily candles. All of that. It's just a matter of just waiting for the next opportunity. But that's what I was doing. It was a continuation signal candle. But I could see that it was topping out here. as a result of looking at the Japanese yen futures and the dollar, I could also see that this was going to give me an opportunity to trade that ghost pattern here at the same time with that key support level on the Japanese yen futures.